Good morning, my dear friends. I would like to welcome you to your talk on the balance of payments. We know the term balance of payments will be very often we come across in the foreign trade transactions of our nation. Balance of trade is the difference between the exports and the imports of the country, showing either favorable balance or unfavorable balance. Whereas the balance of payments is a complete system of recording all the economic transactions of the country and the other transactions with the rest of the nation in the world. Balance of trade is only a partial information in preparing the balance of payments. Here, balance of payments will include the entire value of exports, imports of goods and services, along with financial, capital, and financial transfers. It is a summary of transactions over a period of time, say 1 year, converting the entire volume in a single currency. Generally, the inflows of the currencies usually occur by way of foreign exchange through exports of our products, which include both merchandise and also services. In the ordinary course, and some sort of foreign aid or donations, gifts, or other investment in nature from other countries, all will comprise in this inflows. So all those inflows will be recorded on the credit side of the balance of payments account. At the same time, the outflows which will cause the going out of our currency by way of imports or otherwise, in case we make any donations or aid or gifts or investments in foreign ventures, this will be recorded on the debit side of the balance of payments account. Here, balance of payments is a consolidated account of the receipts and payments from and to the other nations which arise on account of all economic transactions showing public and private investments both inflow of cash users and outflow of cash users, reflecting either deficit or surplus, and also tallying with the remaining balance. Now let us have a look at the definitions. Among them, the important being the definition given by International Monetary Fund. The International Monetary Fund defined the balance of payments as a statistical statement that subsequently summarizes for a specific period of time all the economic transactions of economy with the rest of the world. Now we can understand clearly from the above definition that balance of payments is the complete record of the integrated picture showing the transactions of both inflows and outflows which are connected with the rest of the world. One more definition given by Sir C.B. Kindleberger on the balance of payments. He defined the balance of payments as a systematic record of all economic transactions between the residents reporting and also residents of the foreign countries during a given period of time. Here, the residence is a term which denotes the composition of various stake players like individuals or other persons connected with this, moreover firms and also governmental agencies. Here in this balance of payments account, by all transactions of economic nature, we mean that both the tangible goods like merchandise and other goods which we can see, in addition to that intangible goods in the form of services, and also the assets and gifts will be recorded. Here, in simple, the balance of payments account will tell us how the money is spent with respect to payments and also how the money is earned in respect of receipts. The balance of payments accounts records all the receipts and payments which are the transactions arising out of economic transactions. Here, all payments are regarded as outflow of cash reserves, and all receipts are considered as inflow of cash reserves, which will be calculated in the equivalent terms of currency of our country. In this balance of payments account, all the payments are indicated with a minus sign to show that they are negative in nature. At the same time, all the receipts are indicated with a plus sign for positive nature, which will help in our accounting purpose. Now, we can express the balance of payments account in a simplified manner, with a view to make even a layman to understand the concept of the balance of payment. Here, the balance of payments is equal to current account balance plus capital account balance plus reserve balance. Here, this expression can be mentioned in the form of a formula where BOP is equal to x minus m whole square plus capital inflows minus capital outflows, CI minus CO plus forex reserves. In this expression, X is denoting the quantum of exports and M is denoting the quantum of imports. Capital inflows denote CI and cash outflows being shown as CO, and the forex reserves stand for the reserves of foreign currencies. In addition to this, there will be some errors and omissions at the time of settlement due to fluctuations, the currency values being announced every day by the Central Board of Indirect Taxes and Customs and also by the Reserve Bank of India for this purpose. Now, we'll see the composition of balance of payments account. This will comprise the merchandise reports and also the receipts of the goods exported called merchandise exports. Next comes the second aspect, loans to either foreign countries or otherwise investments made by our Indians in foreign nations and their enterprises, and also foreign investments in domestic enterprises, which may include external borrowings as well. Next, coming to tourist traffic, because in the world economy, tourism also plays the vital role and also forms the considerable contribution in earning foreign exchange. So, the tourist traffic, where tourist expenditures abroad by the domestic tourists and foreign tourists, and the difference between these need to be given in the report to arrive at the exact figures in filling up the balance of payments account. Similarly, money paid to carriers, maybe if the goods are transshipped through ship, through sea, for the vessels of the merchant vessel companies. Otherwise, if air cargo was used, so also for them. And similarly, from our side also, for the foreign goods carried to national cargo ships, all will be recorded. Then coming to gifts or donations or any other aid from foreign countries or international foundations like developing agencies of UNICEF, UNDP, the WHO, the World Health Organization, and the like. So also the Bill Gates Foundation, CARE Foundation, Azim Premji Foundation, and international donors will also be recorded. Similarly, receipts and payments for the services rendered to and also by the foreign firms, including the charges for cable services, telegraph payments, bank charges, the amount paid towards insurance premium, shipping, and airline charges, all will have to be mentioned here. Next comes the expenses of foreign establishments which we are operating outside the country, like consulates, offices, Indian high commissions, or foreign embassies, and the like, the establishments in the home country. Here, both our institutions in foreign countries and also the other institutions in our nation need to be taken into account for arriving at this figures to an accurate manner. Then the receipts and payments pertaining to interest and dividends or any kind of royalty or fees for the technical services or transfer of technology or any royalties for that technical know-how and the like will be taken into account. Now we have come to an understanding as to the importance of balance of payments. Now, the balance of payments will be serving as an indicator of the changing financial position or economic position in the international rating. It helps in the formulation of monetary, trade, and fiscal policies of the country, and also in measuring the progress of the nation with a view to make a comparison of our country with the rest of the world. The balance of payments account will serve as a measuring instrument like a barometer, because balance of payments account will be helping in the determination of the impact of foreign trade and also the transactions on the level of national income of the country, because it is useful for the financial institutions, bankers, and other customs authorities or some other financing organizations or individuals who are taking part in the international trade or allied services like financing and the like, either directly or indirectly. Now, after having heard about the balance of payment accounting, the system being adopted is to be known, and there is every need for us to acquaint with the system so as to enable our records to be updated and presented in that manner. Here, double entry is a system of recording the transactions where books are kept for recording two transactions of the same aspect will be maintained. Here, double entry denotes recording of dual aspects for each and every transaction. In the system, For every aspect, there will be two entries, one for the debit and the other one for credit. That is for receipt and also payment of that transaction. Moreover, the symbols of receiving or payment will be shown in simple terms. All the payments received from other countries will be directly shown as receipts with positive nature shown with plus symbol in the credit side entry. Similarly, all the payments made to other countries will be shown on the debit side with a negative nature and minus symbol will be used. The nature of transactions will be usually either debit or credit transactions that we will see right now. Here, credit transactions, if we take, this would include the items of the receipts by way of exports of goods or merchandise and services. Here, unilateral receipts in the form of foreign aid, donations, or other contributions to some of the projects, and also some grants for the research and development and other commitments made in the international debates and understanding in the form of cooperation and financial assistance, and also by the international organizations like United Nations Development Program, UNDP, United Nations Children's Emergency Fund, and World Bank, International Monetary Fund, and other borrowings. Investments by the foreigners or NRIs in the country will show the capital inflows, official sale of assets, other results like gold, diamonds, etc. will be shown on the credit side. Whereas coming to the debit side of transactions, all the import of goods and services from other countries and the payments made thereon. Unilateral payments and the donations, gifts, interest on loan from international agencies will be shown on the debit side. This will reflect the capital outflows in the form of lending to foreign countries. So also investments by Indians in foreign countries will also be included in this debit side. The cash outflows arising out of official purchase of assets and precious valuable items like gold, diamonds, and other things from foreign countries and also international agencies. Now, both these debit and credit transactions are shown on the vertical columns in the balance of payments account of the nation. We can see the components of this in a tabular form, which will be presented in the balance of payments account. With this, we can have the clear understanding. So, this balance of payment account is a horizontal statement divided into three parts, showing current account, capital account, and official reserves, respectively in A, B, C columns. The current account comprises of visible account, which will show the goods in the form of merchandise will be recorded in the visible account. Similarly, coming to invisible account, the things other than merchandise or goods in the form of services will be mentioned. Coming to account of other inflows, which were not hitherto covered, will be mentioned here. Then coming to the capital account, this will be recording the direct investments made by the people. And second aspect is the portfolio investment, which usually take place due to fluctuations in the share markets in the international as well as national markets. We'll show these figures to get altered day by day. Then coming to the official reserves account, where the discrepancies or errors or other some omissions due to statistical discrepancy was reflected will be adjusted accordingly and made right. Then coming to second aspect of the official reserves of net amount of transactions made by the government, wherein the investments and expenditure of consulates, Indian high commissions, embassies, and the like will also be mentioned. Then coming to the purchase of valuable items like gold, diamond, and other precious items are the reserves, and also the convertible foreign exchange earned from different countries, and also the special drawing rights SDR, etc. will be constantly under the review of Central Monetary Authority. Now, in simple, we can understand that balance of payments account comprises of capital account A, current account B, and official reserves account C. In simple, with this, we conclude this speech. Thank you very much.